excited. Like he's like, let me give you my cell phone number. I want to do all this stuff. And so in other words, it was a really good discussion trying to move the space forward, British. Dennis walks in the room and he goes, hey, Greg J, I want to do a selfie with Hill. But I want you to take the phone. Interrupts our conversation, shows his phone to me. I take Dennis's phone because what am I going to do? Like tell him no in front of a congressman? You know, and if you see, I took a picture, and sure enough, it's Congressman French Hill and Dennis Porter. And what did French Hill say? And what everyone said is, please don't refer to him as potentially the next House Financial Services chair, because he's fighting for it within his party, but doesn't want to be public about it. So Dennis takes the post, he puts it up, and in the post he goes, and probably the next House Financial Services chair, French Hill. And then of course, British, he takes his phone back from me, and then he leaves the room. And then Congressman Hill looks at me, and I look at him, and like, all right, now we can keep talking with a conversation. Yeah. But I was like, he didn't come in to like start talking policy or telling French Hill we got to do a strategic Bitcoin reserve. He just came in for a picture and then was out. So anyway,
yeah. But the interesting thing is,
I'm not trying to throw shade.
Yeah, no, the interesting thing is like you need morons like that. You know, you need morons like that because they are so. How do you say it? Like unconscious about what they're doing, that they at least get the topic of Bitcoin in the room, which then allows more serious people to take over.
You absolutely nailed it.
Yeah, but the good news is that you don't need anyone now because Larry's in charge, and these Congress people, as much as you guys like them, and you talk about them highly, and this person's a real person to you, and that person has real intentions. To me, they all bend over for BlackRock. So when Larry calls them and says, you're no longer getting a campaign donation unless you're pro-Bitcoin, I have trust in that. I have trust in my real president, which is Larry Fink.
I cannot disagree. I think DC politics, British, is just like any other business, right?
Yeah. They're all animals. No, it's worse. It's like one business, and that is prostitution. That's what it's like. It is specifically like prostitution. So all of these people are animals, and right now their pussies and assholes are wide open, and BlackRock is guiding them exactly what to do. I have trust, as I said, in the forever president named Larry Fink. No elections needed. The king of America.
I'm so glad you don't get what you want.
What do you mean? He's the president. You disagree with me, Silva?
Yeah, I do.
You're supposed to be on 4chan. You're supposed to be, like, agreeing with what I'm saying.
I'm not on 4chan. What's 4chan?
You're the 4chan guy.
No, I'm not.
Yeah, I don't believe, I don't believe in elections and shit like that. I believe in finance. And it's moving forward quite nicely.
British, I love it. You're like the John Lennon. I don't believe in God. I believe in me.
I believe in God, for sure.
I'm just quoting the lyrics. I'm not. By the way,
Great song.
Dr. Needy and Grace, if you're asking, like, why you don't see me as much around here, it's with some of the clients and the politicians I work for, believe it or not, and this is actually interesting to me, some of the top politicians actually have Clubhouse accounts. And back in 20 and 21, they would come in and they would listen quietly at the bottom of the room to like what was going on. And what I'll say is it was hard for me to, I couldn't let my professional life bleed too much into it, as much as I love you all.
You need to come back as a pseudonym.
Yeah.
We know who you are. All you have to do is open your mouth and we won't say words.
I know. I know. But it's like, with British, and I'd be British.
I bet they love those British bullish as fuck rooms.
Like the assholes and elbows, and then you got somebody down here who won't stop talking about the fact that he was bullied by this room 30 minutes ago, and I only caught 2 seconds of it. So, like, but, that's what I love Clubhouse. Clubhouse is like, it's like Gladiator, I mean, here's this guy, Ethan, who's still bitching in the chat, about how and I'm sorry I'm giving him like airtime now, who said he's going to like shut down this room. I mean, it's like Occupy Ethan with his problems that he had in the room earlier with Jimmy. And hey, man, I love it. I love this. This is like the arena, man.
Hold on, I'm gonna occupy Ethan right now. Give me a second.
Oh God.
Jason, that's why I had to leave. It was just too painful.
Done.
Oh, did you remove him?
Yeah.
I came back and I'm surprised he was still here. I thought he.
You didn't have to do that.
What did Jimmy do?
Entertainment.
You ruined all the fun, Berta.
Yeah.
No, we got Jason here, who's actually talking about real progress that's being made with, Larry Fink's bitches in the audience, right? Hiding in the audience in secret accounts, and that's more interesting to me than whatever the fuck Ethan had to say. Go ahead, Jason.
You British.
He was talking about Ethan British. What are you talking about?
Ethan's a senator?
No, I wasn't talking about Ethan. I was saying I saw all I said was I was just joking, everybody. I was about this cool conversation with British, and then I see this guy Ethan not stopping, like commenting about how he's been silenced in the chat room, and I'm just like, welcome to Clubhouse, baby. Just everybody's got a gripe. It's like the arena, everyone. It's like how the bitch politicians you're talking about, the British, would actually talk in a room where no one else is around.
Exactly. Yeah. I've been around these people. I know exactly how they talk. I know exactly how they think. And I know exactly how the switch up happens as soon as, the camera's in the room. I've seen it literally with my own eyes. Yeah.
The thing is, a lot of the politicians are basically operating on the same logic as Ethan. They just figured out how to be a bit more polished, but they have the same, I should be able to say the things and change and control all other people and what they think and say.
The best thing to say. The best thing to say to a politician is, don't tell me what you think, show me who's funding you. Simple as that.
Yeah.
And the good news is that BlackRock is funding them, Vanguard is funding them, and they're all positive on Bitcoin. So Jason, your work's going to get a lot easier, I think.
I was saying we got to orange pill the DOD, get the military-industrial complex running on Bitcoin.
Well, I'll tell you so my nonprofit, Value Technology Foundation, I started with my wife at the very beginning, at the turn of kind of 2020, a little before that. And we got contracts training like for the Department of State on Bitcoin and blockchain, and everyone thought I was crazy because like I put in a bid for the contract, and I actually said I want to teach like Department of State. One of the things I want to teach on my agenda is Bitcoin mining. I thought for sure they'd see that and be like, no, but they actually took it up on us, and actually with the help of some folks in the Clubhouse room, was able to do training on hold on, that's okay. I just, sorry, my wife is coming in the kitchen and starts the microwave right behind me as she hears me talking. So
Tell her I said hi as well.
great. I know you just want to eat. So rude. Okay. Let's keep this domestic dispute for later, sweetheart.
Tell her I said hi as well.
Oh, Bridge Bottle says hi. Bridge. Yeah, I know it's confirmed. You can come say hi if you want to talk to people. Yeah. They haven't seen me around Clubhouse much anymore, sweetie. So that's shit. British, help me. What was I just saying? Or what were
You were talking about the DOD taking up.
Yeah, the DOD. Yeah. So long story short, like that's one of the things is like potential applications. I've talked about that, worked on stuff with that for like DOD, because I'm like, look, where a lot of this technology gets really advanced and used is like that's how the internet came out, was from DARPA. DOD trying to use messages with the internet. So I believe that. I believe the DOD can really, getting them to be the orange pill guy for the DOD, though, I haven't, Jason Lowry, I don't know if you've seen Jason's stuff.
Of course.
Soft war and everything. I honestly haven't read it. I don't want to make comments. I know some people have really hard thoughts about that, but
That's great. I have it's great.
Yeah, so that's like you said, that's where it's useful to have these ideas, especially from somebody in Space Force. I think his issue he ran into is he got a little bent around the axle because he was trying to write a book and something came up internally. But that's the military for you. I'm surprised he didn't get in trouble earlier. But that was good.
Well,
good for him.
If you want to, you know, it sounds like you're making.
Jason Howard.
Here comes Bear Aaron.
Sorry. Just helping. Trying out.
Sorry, who's? I couldn't hear. I was trying to listen to British.
It's more like Eeyore.
Space Cadet Lab.
You know, like Eeyore.
Oh, yeah. Okay. You know, look, everyone, there's criticisms for everyone in the world. I'm sure there's criticisms for me. I've certainly gotten them. I was just bringing him up in the context of the DOD, and he's definitely the number one orange pill dude for military. So,
Great.
Yeah.
I like him. I like his strategy. I remember talking to him like privately, and he was like, "This is what I'm about to do," and he's sending me screenshots of like Bitcoiners that I respected that were saying that, you know, he's blocked them and he hadn't blocked them, but they were saying it just to get involved, and he just fucking psyoped the whole of the Bitcoin space in 6 months. It's fantastic. Did Jason drop off?
I still see him there.
Probably arguing with his wife about the microwave.
Yeah. I was just about to tell him, like, he sounds like he's making progress with the military. If he wants to make less progress, he can work with Michael Shapiro and can make that happen too.
You know, British.
Here we go.
No. I mean, you talk about how you talk about how you want. No. Let me get some. So you talk about how you want to build something and you're not sure what you're going to want to build. Well, I'd say building things. Hold on, let me see. Building things is hard. So sometimes you've got to do hard things. And everyone knows I'm the easiest person to troll, so you need to choose a harder target than that.
Yo, British, I am absolutely unequivocally, I'm positive this nigga Mike has talked himself out of some pussy before.
Oh, 100%.
I shared it on here. It's, it happened. I shared the story about like this summer at a bar, yeah. Definitely fucked up a lot of things.
It starts with, hey, you want to come back to my van?
No, that's not even the thing that does. No. It's just pure Michael fucking things up through autism, not even the man.
I don't know. How do you fuck things up when women are such whores nowadays? Like, how do you fuck it up now?
Really hard to do, right?
It is. So, yeah, I've got to, reflect on stuff. Like, Lamar asked me the other week, it's like, are you okay with that? And I actually appreciate that question because, like, it made me think. I got to make changes.
Well, Lamar, you made him think.
I don't even know what the fuck he's talking about, honestly.
And neither do I. I thought you wouldn't. But he does. He found benefit from it.
Hey Vic, are you in SoCal? Maybe if you don't want to say that, I respect that. Don't worry about it. But if you are, you're coming right when it's about to rain, and it hasn't rained in a while.
Grace. I'm eating, but yeah, I'm here. I'm visiting folks, and I'm just pigging out because there's so much fucking good food, and yeah, the weather sucks. I'm pretty surprised.
Yeah, I think it'll get better though. I think it was just like this weekend. But enjoy your stay.
Thanks.
Hey, Dr. Nitty. Are you still there?
Yes, sir.
Hey, when Rick Jason was addressing you and Grace earlier, he said Dr. Needy.
I know.
Shit made me.
Sometimes I'm that too. I'm needy of some more Bitcoin. Never enough.
What's the price at right now?
69.
I saw it go down to 97?
Negative 97.
Michael, I'll make that bet with you. 100K sats, I'll give you if it goes over 100K by the end of the year. You give me 500K if it.
End of the year? You don't think end of the week?
So I'm saying he's giving me 500K if it.
Well, yeah, because I know what you're looking at. It's basically the theory that there actually is a lot of resistance because of all the shorts and everything.
You're betting on the wall, Chris, aren't you? You're betting on the wall.
You're up, fuck it, I'll do it. Let's go. Let's go.
All right.
We're in. It's locked in.
Cool.
Let's
All
record it.
Cool.
So
So the total bet now. Well, we bet like a couple weeks ago when Bitcoin was like 83K. I said, "Is it gonna go over 100K by the end of the year?" And Michael bet me. And we
Oh yeah,
got
so if
500K.
it doesn't, you get 1 million sats from me.
I get a million. If it does, you get 600. It was even odds a couple weeks ago. Now it's 5 to 1.
Right, no. If I win, I don't get 6. I get, it was even odds. Wait. Oh yeah,
I don't-
600 because we got 500. Yeah.
Wait a second. Chris, say what the payouts are?
So originally we had a 500K sat bet, right? I said it was not going to go over 100K. He said it is by the end of the year. That was a couple weeks ago, and the price is 83K, so it's even odds. Today we're making the bet with 5 to 1 odds.
Oh, and just to confirm,
bet.
Chris, it just has to go over 100K. It doesn't have to be over 100K.
Yeah, but it has to be on 8.
Yeah, not some bullshit. Whatever. Yeah.
And how many sats are you risking, Chris?
For the new bet is 100K, and he's putting up 500K.
Okay.
So 5 to 1 odds at this point.
Okay.
So the total payout is 600 if he wins, and it's a million if I win. What are your thoughts, there,
Gotcha.
gambling man? Do you think this is like fair odds, like 5 to 1 fair at this time?
Yeah, I say Michael, that's a good price.
Michael's likely to win for sure.
Yeah, Michael probably by betting odds has the better side of the bet.
Even at the 5 to 1.
Yeah. So I bet I have.
Yeah.
What,
I mean, y'all already booked it, so like.
Yeah.
I
So
mean,
I'm not changing it. But I'm just saying, like, I was hoping to get a bit higher, but whatever. I don't care.
I'm not like a covered call yield guy, so it's hard for me to really want to make it worthwhile because
I mean,
I'm not going to risk that much.
I definitely think it's more like 11 to 1. 12 to 1.
Trey, don't you have one?
That's
for
what I'm
the
saying.
100K
You might
that
be
they-
able to-
Yeah, I have an even money bet to 100K.
The options would say otherwise. The volatility is definitely, like if you were to put an options bet that we're gonna hit 100K, like the payout's pretty low.
So
I wonder about.
That's true. In fact, according to
what
the
is
markets,
pretty low?
I might be giving Chris the better deal.
Actually, no, but if you think about, like, if I were to go short, right? So how many percent are we away from 100K right now?
3.5%.
What's
sorry,
the
2.5%,
price now?
2.5%.
Maybe check the price before I agreed to that.
So 2.5%, that basically is 40 to 1 odds. So if I went 40 to 1 with 100K sats short, I would get 40 million sats, right?
Correct.
Well, that's if it went to 0. But like,
Actually, if it's
I'm saying that-
100K,
that's where my
It went down to 97.5.
I'm saying that.
Also,
I'm saying
if you
that's
said
my
anything
my
other than
liquidation.
that-
Let me just talk. My liquidation point would be 100K if I went 40 to 1 odds. So it'd need to go down 500,000. You know, have to go down a certain amount. I don't know, to basically pay it out. If I'm going short.
All right, I think I have 4 bets now that I might be winning at the end of this year. Because I have these 2 with Chris now. I have the bet with John for 100K. And someone else on Spaces bet me that the price would touch below 6K again. At the end of the
this year? Oh,
It was like 66 when we made that bet. And then
wow.
like by the next morning it was like 69.
I like the chances on that bet too.
You know what? I really regret not going more bullish on that because he was ready to push the number up. He gave me 1.5 to 1 odds. He was giving the odds to someone else. I had to jump in and be like, hey, I'm taking that bet.
So you got 1.5 to 1.
Yeah. Yeah, so I'm going to win 1.5
How many
million.
sats did you bet on that?
I'm going to get 1.5 million sats.
Nice.
Trey, how much is your bet for?
5K fiat.
And what's your bet?
It has to hit 100K on Coinbase
By Thanksgiving Day or end of
by
Thanksgiving
December
Day?
31st.
Oh, end of the year. Okay.
It was a real cock tease the other day when it hit 99,850.
You know, it'd be actually smarter for me to not bet these kind of bets in Satoshis, but bet them in dollars. I get actually better payout, right? Like if I, with Michael on this bet, if I say, you have to pay me $500 versus 500.
No, but that's what's great about these peer-to-peer bets. We're actually betting in Bitcoin, which the markets won't do.
I know, but do you understand? So like, if you're
Yeah, I know you
100K,
want to do it, but I don't want to do it. Fuck getting a dollar payout.
But I'm just saying, like, I have to pay you $500 if you win. But if I win and Bitcoin's at, 80,000 sats, you're only paying me You're only paying me $400, right, in dollar value.
Yeah.
I also have a micro strategy bet with the same guy. I bet him 5K that micro strategy would double, and he gave me even money that it would double over the course of 12 months.
What was the price when you made that bet?
366.
That's a shoe-in.
Yeah. Because even if the multiple drops, you just need like a 3x on Bitcoin and it's still okay.
And that one's by the end of the year too?
No, I get 12 months from the day we made the bet, which was 4 days ago.
Oh, that's easy.
Yeah, when I realized he obviously didn't understand what MicroStrategy was doing, and he's also a Bitcoin bear. So when I heard all that, I was like, I tried to bet him 20,000, but he only wanted he started. I started at 20. He started 2,500, and then I talked him up to 5K, and he's trying to be like, well, maybe I'll do more, which I know he's not, because fucking MicroStrategy is probably going to be 500 in about 2 weeks.
What do you? So for everyone who thinks the premium isn't going away, which maybe that's the case, I imagine you think still in the bear market though, then it gets squeezed. And British, are you still
they're
there?
saying that's stupid and that there won't be a bear market is basically the arguments I heard. Because that was my point, right? Within the next 10 years, you're going to go through a bear market and that premium's going to go away. And I was told I was an idiot and I was bearish.
Well, I don't know how many people are saying there won't be a bear market or what that means.
I don't get, with everyone being so bullish on MSTR in this room, and I think it's a great trade. I don't think they think a lot of the people aren't holding for 10 years, but they just think it's a trade. why is everyone not just doing MSTU? Why is everyone doing MSTR?
It's hard to stomach the volatility.
I got out of it for that reason. I didn't like the way it made me feel with those swings, Chris.
Well, Chris, I'll tell you, if from my perspective, I don't want to hold any MSTR. If I want exposure to the possibility of the upside, I'm going to look at call options only and not the exercise. Just call options and Bitcoin. It's like, I feel like MSTR is sort of
like I feel like, but like everyone was so eager to get BitX, which is like the same thing as MSTU basically, right? Except it's 2x leverage. But
well, Otto was saying, yes, Otto actually has a lot of MSTU. If you heard him,
most people in this room have MSTU.
Yeah, so okay, probably a lot of people do.
So
he said it was basically half leverage.
Shut up. So like, Bitcoin is a long-term hold, right? People are holding Bitcoin for the long term in this room because they believe in Bitcoin. MSTR, I don't think everyone thinks it. They're not as convinced it's long term. They think maybe long term, but probably more of a trade. So that one makes more sense to use leverage on, like use a leverage product versus like BitX using like a 2x product, you know, on Bitcoin, because you'll hold Bitcoin forever and you're okay with it. But MSTR, not something that you're as long-term focused on, so why would you not just use leverage on it if it's just a trade?
Everyone is. Everyone has call options and MSTU.
Okay. Are these call options like, it's gotta be fucking ridiculous, I imagine.
Yep.
It's probably hard to, like you're paying.
Super high premium.
Yeah.
Yeah, I think the MSTR call options are overpriced compared to the spot ones. And the thing is, why do you want? Because when you get an MSTR call option, you're also speculating on the premium itself. And I guess if you have a lot of conviction in the premium, it makes sense. And I recognize the possibility it could go higher, but I don't know how someone would have such high confidence in that.
Yeah, like I think MicroStrategy deserves a premium versus what they hold, right? Because they do earn more Bitcoin. I just don't think that premium should be over 3. Like, I think at that point, the trade's been made. You took the volatility to the upside. Might go higher, but like...
Yeah, and the other thing is, what happens if your counterparty defaults, right? Like, that's the whole GME thing, which is theoretically, if there's a big enough short squeeze, the price can go literally to infinity in a theoretical sense. And there's going to be circuit breakers. And then people say...
And if they're not, they'll invent them. Right? There was no circuit breakers that could stop GMEs. They just said, all the brokerages said no more buying. Like, what? What are you talking about?
Things are ultimately contracts that are backed by the state. And the state can at any point change the rules of how a contract works and say, hey, these agreements are now null and void.
But even if they get fined for doing something illegal, they still say, stop it, right? Like, they're just like, oh, okay, we'll pay the fine. That's better than infinite loss.
What was the bet on MSTR doubling in a year?
I bet somebody that
yeah. But,
5 times.
I bet somebody at 366 that it would double over the course of 12 months.
Even money?
Yeah.
So what's the payoff?
5K.
Okay, but you bet even money. Because he can hedge that bet for like 15% of the price at the time.
Yeah, he can do whatever the fuck he wants. It's just a personal bet between two people.
Oh, okay. I'm just saying that trade is not even money fair. It's like way less.
And this is the guy telling me 11 to 1 odds. Can't trust them.
Is there a game for like paper trading like this? Like swim, was it swim or think? Or think and swim? Are you guys familiar with any derivative games?
I'm not personally.
Me neither.
Yeah, basically you could spend $1,000 and get a 5K payoff if that happens. So if you just went out and bought $1,000 of call spreads to 1 year out, then he at worst is flat on the trade, or he makes $4,000.
Yeah, well, we also bet Bitcoin back in March that I bet Bitcoin was going to 100K, and he bet it wouldn't, and he didn't buy Bitcoin back then. So
well, maybe, even money.
Why am I to expect he's going to hedge it this time?
Well, what he does, he could be doing this just on the side. I don't know how smart your friend is. My point to you is you shouldn't be doing this trade for even money. Oh, that's fine. I'm just saying I would love to do this trade with you any day. Is what I'm saying. But I wouldn't because I don't want to take your money. But it's like Hodl had done a similar trade, or I think McCormick had done a similar trade. Like trading, like the way options price is you have basically a 50-50 chance you're higher or lower by the end of the year. Like the options market are not directional.
It's not an end-of-year bet. It's that it touches it.
Yeah, it's a digital, which is fine because these are American. So you can buy these American options. If it touches, you just exercise them and you're done. Well, actually, it's not exactly right because you can't exercise the call. But you can roughly hedge it. I mean, you're not going to find a digital price, OTC right now in the market, but you can get pretty close. Called it one tut.
Yeah, that bet that Hodl made with McCormick for 300K for a Bitcoin, that was a dumb bet. Like, in the sense of, like...
Super retarded.
So
It's just what happens with us Bitcoiners is we have such certainty about the path, we forget that, like options market or direction agnostic, they just don't care which way you're going. So Bitcoiners are like, 300K sounds like fair even money trade because obviously we're going to be there. But that's not, if you're on the other side of that, you're like, that's fine, I'll do even money trade, then I'm just going to buy some calls for much less. And like, just from a returns standpoint, you're gonna crush the other guy. Like, basically, you should be betting whether you're over or under where you are currently at roughly even money. And then it gets lower and lower as you go up.
I wonder what the max pain is for December date.
What do you mean by max pain?
In like the futures market, like the forward market or whatever.
What do you mean by max pain?
Like, that's always a good metric to just kind of know where the market thinks it's going to end up, basically, like whether it's equal, like most amount of pain, most amount of people getting liquidated or expiring worthless, all the options, I mean,
it's like, I think there's this thing where people confuse expectations with, a fair price on things. So it's like, even if you have an expectation, you're going to 2x and you have a lot of options there and whatever, like, that's not where you can arb that expectation. Like, that expectation is even money close to where you are right now. If not, if the whole market is like, fair is 2x from here, like, spot will adjust to that. So Bitcoiners are like, I know that we're 5x, a year from now. But literally your financial instruments are not pricing this at all because spot is not there. So, we get into these weird, confusing, bets really, or expectations where we're like, well, it should be 2x, so like this is a great trade. But, you can arb yourself out of that, or you can get a much better deal by going into options based if you have that conviction. It's like in FX markets, we have forward FX rates that you can arb them just by doing differentiations on like the returns of the respective risk-free rates. Like, you borrow currency spot, you invest in the respective, you're paying floater in one currency and receiving floater in the other, and at the end you can deduce the fair, forward FX of the currency, and you can trade that. But typically it's very different from your expectation. And, and people don't realize that, they're like, I'm getting a good deal, but you're really not, because you're not pricing it correctly. You're not looking at how the market is actually pricing these things. And, it's fun to do a bet with your friends, but the truth is you could get a much better deal just trading out of these, just replicating your bet at fair odds in the market, basically. So like you could.
I'm willing to do
if you're
that
betting-
too. I mean,
If-
this
no,
was
it's fine,
just
and
a
that-
friend to
it's-
friend.
Yeah, it's totally fine. Like a friendly bet is cool, but my point is like you could have replicated your payoff and gotten 5 times the return. Is my point. Like you could have, bought 5 times the exposure, and then you would have gotten 25. You would spend $5,000. Like you're either going to lose $5,000 or make $5,000. Well, you could have spent $5,000 and gotten $25,000, by buying the options instead. So it's like, it's fun to bet with your friends, but like you're leaving $20,000 on the table potentially. That's all. It's not fun, when I say these things, people are like, oh yeah, well, I'm just betting with my friends. And that's totally fair. But like,
BC1,
as a
what do you
former
think?
risk professional, it's like, come on guys.
All right, what
All right,
do you think the
BC1.
odds are?
Well, I'll have to reach out later. We'll talk about how I can make these bets.
I think
Oh, sure,
BC
sure,
would
yeah.
say we got to put these bets on the blockchain.
BC1,
No, I'm saying you have to prove them correctly.
I'm joking.
I mean, yeah. I should trade against
All
you
right,
guys, but I don't want to do that.
I made a bet with Michael Shapiro here.
Mhm.
That Bitcoin won't go over 100K by end of year. I made this bet today.
Yeah.
What would you put the odds at?
I don't know. It must be close to 0. I mean, if you're at spot and it's a continuous bet, right? I don't know. I don't know if I can price digitals with American options is the thing. Well, actually, I'd have to look. But, I mean, the probability must be very, very low, right? Because you're, like, so near spot and you have, like, super high vol. Like, the odds you don't touch from a modeling standpoint are, like, super slim. Like, way less. What are you guys on, a 5 to 1?
Yep.
5 to 1.
It's got
I
to
think
be
it's
way
probably-
bigger than that. It's got to be way bigger than that.
Yeah.
Yeah. Now the only thing then is you're like, as a conviction, well, there might be just a lot of psychological sell pressure, and that may be true. Like maybe there's just somebody out there with 1 million coins. It's like I promised myself I would sell it all at 99.9. I'm just market sell there, and if that's a thing, then yeah, you're not going to touch it until next year. But that's just not how models think, So if you're just going to blindly plug in market data and volatility and spot price, it's going to tell you your odds are like, basically close to 100% that you hit at this point.
BC1. So I was thinking about something too, which is, and maybe you have a take on this, is that most people maybe actually should have a small portion of their portfolio as call options. Say someone who's like all in on Bitcoin, maybe the smarter thing is to be 99% Bitcoin, 1% long dated call options on a perpetual basis.
Yeah, I mean, listen, calls, they're just a different source of exposure. Like all these derivatives, they're just meant to help you adjust your risk profile to, your conviction or your needs.
Well,
So,
I guess
I-
the underlying premise is that if you're a Bitcoiner and you're operating off the assumption that it's like, Bitcoin's going up forever, the idea would be that the market doesn't know that Bitcoin is going up forever, so it is going to be fundamentally underpricing all those options from what you think the price is. But
No,
people
that's
don't
not-
actually know that.
The joke is that you just figured that out.
I don't think that's the right way to think about it. The market isn't underpricing these options, right? But that doesn't mean it's not a good idea to buy them. Like if you have a very strong conviction that an asset is going up, what you're basically saying is it's not following a random, like the way you price options is you say, I don't know which way the asset's going. It has equal chances of going up or down by X amount every day. And there's funding components, blah, blah, blah. But basically, your pricing models are directionally agnostic. Like they don't make that judgment case because
Yeah,
they assume
exactly. That's what I'm saying. The pricing models are wrong. So
No,
no.
they're not wrong because because you can replicate a risk-neutral portfolio where your only exposure is volatility. Why? Because if you're a market maker of options, you're going to sell the call and you're going to buy a little bit of spot. And the only way you get hurt is if it realizes higher volatility than you priced into your option.
Well,
So let's say
that's
right now you're
exactly
expecting
the thing.
it. Yeah.
Because it's asymmetric to the upside, that's the thing. People are underestimating the odds it goes extremely high. That's similar to
Hear me out, Michael. What you do as an options trader is you sell the option and you all that matters to you is how fast it goes. It doesn't matter where it goes, because you're going to sell the call, and then you're going to buy some Bitcoin. And then if it goes up, you're going to buy some more Bitcoin. And then it goes up, you're going to buy some more. And eventually you're going to have a hedge position. And the only thing that matters to you is how fast it went. So if it doubles overnight, you're not going to have bought enough quickly enough. But if it goes up 5% every day and you price it at 80 vols, you're going to end up P&L flat. So like, you're fine.
Maybe they're able to keep themselves from getting blown up. But from the other side, the thing is, if say
they can make money.
Hold on, let me ask you a question though.
Yeah.
Okay,
Yeah.
I'm not disputing that, but
Sure.
so they take a model that says there's a certain level of volatility, which means that they can define what the probability is in their model of the price hitting a certain level by a certain date. So if you say 1 million Bitcoin at the end of next year, they have a model and they say it's whatever tiny little percent.
Yes. And by the way, it's the same probability in the other direction.
Yeah, and what I'm claiming is that at that edge, that tail event, that's, a 6 sigma whatever event, because it's so small, it's actually off by a very large amount, and the actual probability might be 10x or 100x higher than they think, and that's why there's an edge to buy Bitcoin.
I think what you're saying then is their volatility assumptions are wrong. That's basically what you're implying.
And I think their volatility assumptions have to be wrong if their assumption does not start from the premise that hyper Bitcoinization will occur at some point in the future.
Sure. Yeah, and that's a fair position. But I guess just a little pushback to you is your comment. If your comment is about vol, your comment is about this kind of realization event where it starts to move really, really quick and the market's not pricing that in. So if that's your assumption, then yes, then what you're basically saying is the market's underpricing volatility and I'm going to buy some calls. You could buy some puts, by the way, same thing, but ideally you want to buy that upper strike. What you're basically saying is the wings are underpriced, which is a fair position to have, and it's a directional position. But what I think as Bitcoiners, when we reach for calls, I think what we're more intuiting is we think the market is underpricing this asset and I want leverage and it's going to go up and I'm going to have more exposure with my calls and I'm going to make money. And when that happens, let's say your options are priced at 80 vols and it goes up 5% every day. Your options traders are fine. They're coming out break even. You're going to crush it, not because somebody sold you a cheap option, but because you bought Bitcoin indirectly via these options market maker from people that sold it to you. And then it went up. And the people that sold you indirectly that delta or that exposure through the options market maker, those are the ones that are, financing your success, basically. But if what you're saying is, I think the bull markets are underpricing tail events on options, which is a perfectly fair position to have, then yes, you should be buying those calls because basically they're cheap in your mind.
Yeah.
And that's totally fair position to have.
And that basically has been my position the entire time, but I didn't do that because I'm not a regular trader. So I did it sporadically. And if I'd done it consistently, I would have done a lot better. And I think there's a lot of people in my position who can formulate this position, but they're not options traders, so they don't necessarily do that.
No, that's fine, but you would have done better buying calls because you would have had more leverage. So when Bitcoin went up, but there has not so far been a Bitcoin volatility event as you've described. So you wouldn't have made that money on having bought a cheap call priced at deflated vol or underpriced vol, as you're intuiting, right? We have not had
so
yet this moment.
So are you saying then that the only reason people are doing so well with the MSTR calls is because of the unexpected event of the premium suddenly jumping up so much? And that
100%. If they had bought Bitcoin calls, they would have done very well. But basically what they're getting now is the asset's 3x because this other thing has inflated the price of MSTR. Yeah, it's completely that. But it's been very volatile, but they haven't made their money on quote-unquote Vega. It's they haven't made money on the implied vol. I mean, some of them have, but for the most part, especially if you buy a call and then the stock runs a lot, now you're there's no vol exposure. It's like purely priced to intrinsic. Once it becomes deep in the money, which I'm guessing a bunch of these people are. So they're just riding this leverage, and at this point, this leverage is
it's totally insane that these guys are not selling off large portions of their position and that they're just riding it.
No, I mean, I'm not saying I agree or disagree with you, but a lot of this space has convinced themselves that the premium is fair or underpriced. If that's your conviction, then you shouldn't sell it. You know. Now, I don't personally agree with that.
Still rebalance just because of the downside.
Not necessarily, because I mean this comes to how much should you allocate to your conviction trades, right? I mean, some people would say if you identify
people that have 90+% of their net worth in call options that are in the money.
Yeah, I understand, but you know, if you
gotta remember, Michael,
stash,
some people start their position in the money.
Yeah, but that's a side comment.
I think there's a psychological bias where people think, oh, I put a small amount of money in, so I'm not risking that much, because it's the sunk, or no, it's not the sunk cost fallacy.
Well, it's the owner. It's house money fallacy.
House money. It's a house money fallacy.
Yeah, house money fallacy. Yeah, because if they just had that much in Bitcoin, they would not be just buying those in the money calls with that percent of their net worth.
No, but it's true that when a position's grown like this, it is easier to hold on to than to like allocate to it. Like if somebody was worth, you know, a lot of money or 10 million or whatever, and they were just waking up to Bitcoin, it would be very hard for them to put, you know, $9 million into Bitcoin. But if, you know, years ago they put, you know, 10 grand or 50 grand or whatever, and it turned into 9 million, I feel like psychologically it's a much easier position to ride, especially if you've been through the ups and downs. I know it's an interesting psychology. I mean, from a what are you supposed to do perspective, it shouldn't matter how you got there. It's like, would you reinitiate this position today? Is the right question always when you're holding an investment? Yeah, for sure. But I think right now there's a lot of Kool-Aid drinking on this thing, and the truth is it could keep going, right? But you know, I'm hearing a lot of people.
The vol is so high. People are buying call options right now.
Well, I don't know why you buy calls on MSTR, because you might as well buy spot. They're so expensive, right? It's like 300 vol names.
Yeah, but people think they're getting a lot of leverage, and they're just not.
I mean, they are. Well, I think what strikes are they buying? Are they buying like 3x strikes or 4x strikes or whatever?
The multiples don't go 2x. 1080 is the highest, so it's like 2.5x is the highest.
Yeah, I mean, so 2x, so they're probably paying, 25% premium? Yeah, or
I think
something.
Otto was just saying that it was like 170 or so, or 160 to buy 1080 calls on MSTR for January.
So you're paying 30% premium for 2.5, I mean,
the implied volatility is so high. This is when you sell.
Well,
this is when you sell options.
This is not... By the way, guys, this is not the right trade. What you should be doing right now is buying calls on MSTU, which is also a thing. Let's see what the vol is on there.
That makes sense.
Anyway, I'm joking. Don't buy calls on MSTU. I mean, maybe, whatever. Do what you want.
Well, no, it's maybe put a smaller position on MSTU calls versus MSTR, because basically if you're going out on the risk curve, go farther out.
Sure, it's like, what's the max? Yeah. I mean, I kind of like... I don't know. It's funny the degen play of this cycle is on Bitcoin.
What's the 2x leverage short one? MSTX, is it? Or is that's long too, isn't it?
That's another one you can do. There definitely is one. Yeah, I think
MSTZ.
MSTZ, yeah. So they should be hedging with MST.
Think Z for zero, like MST to zero.
You have to be careful with hedging with double short. If you're hedging like a 6 months, 1 year position with a double short,
no,
like
but
those
for these
two
guys
can
that
end
are
up at zero.
if these guys are at 20,000%,
What I'm trying to say is the longs and the shorts could all end up at zero with enough volatility a year out, no matter what happens. So like you think you've hedged yourself. No, but you think you've hedged yourself, and MSTZ might literally your MSTZ calls might literally end up out of the money, even though MSTR went to shit, because it's just moved too much. So you have to be. You remember the triple long and short financial ETFs, like FAS, and I forgot the other one, FAS, FAZ.
And
Like yeah. So this is like a favorite before the GFC, and they both went to zero, like over GFC. Like the triple short went to zero, and the triple long went to zero, because with enough vol, leverage ETFs all trend to zero. So because they're daily rebalancing and they're leverage daily rebalancing, right? So, to think of it simply, if you have a triple long or short asset, all you need is a 33% up move followed by a 33% down move, and they're both dead.
Yeah, this is what I was saying. I like the idea more of options that have a particular strike date than, if anything, they seem more complex, but I think it's more intuitive to think about that than the leveraged instruments.
Yeah, all I'm saying is be careful thinking you're leveraging, you're hedging your long by buying a call and a short. That's all I'm saying. Even though it sounds like it works. It might work for a little bit, but it might stop working really quick.
Another thing I was throwing out was that if someone is, a Bitcoin, or they're trying to have a lot of Bitcoin exposure, it might be very difficult to start a business because, you're sort of going into cash and putting things into a way that's fiat denominated. And so you're sort of short Bitcoin from that perspective. And then having a call option strategy can mitigate that short. Or if, say, you're a Bitcoin business and you have Bitcoin investors and you've just raised a bunch of money, you don't necessarily want to have a bunch of cash, but also you can't afford to have volatility overall, but you could have a very small percentage that's just long-dated call options. You could have a 1-2% call option strategy to sort of as sort of insurance of Bitcoin getting away from you, from the position that if you're a Bitcoiner denominating your wealth in Bitcoin, you ultimately want to get back into Bitcoin.
Yeah, I think people tend to think about options as like risk increasing because they provide leverage, and I think it's sometimes erroneous. Like they can be risk diminishing if you have $100 and you want to get $100 of Bitcoin exposure, but you don't want to put $100 down. You can buy spend $20 on the same exposure of call options. In a way, that's a safer position for somebody to have potentially in going on Bitcoin, especially if you have cash flow needs or whatever. Like there is a risk-reducing way to use options to gain exposure, and it doesn't have to be a Wall Street Betty like DGen plays all the time.
Yeah. So what I was thinking is it probably makes sense to have a product that makes it more straightforward for people to use that within a cash management approach without having to be options traders. Like a one-click sort of robo-trader where you describe what your needs are, and it helps you basically from the perspective of you're insuring against Bitcoin getting away from you.
Yeah, there's things like that. There's things like that in the financial industry where there's kind of these algorithm, and it's called QIS, where hedge funds will go and they want to implement a kind of strategy, and then the sell side firm will set up an algorithmic kind of strategy for them. It's a thing. It's less a thing in retail.
At a higher level, because individual companies are not really doing that. So I was saying it should be a very simple. It should be even a retail-facing product.
It could be. It becomes a bit difficult if you have to spend money on a recurring basis, but I don't know. These things are conceivable. But I think I want to make sure not to get too complex about things, though. It's like I feel like the landscape is rich enough right now where you can do little futures, you can do some calls, you can buy ETF. It's fine enough for most use cases. I don't personally feel I need any more tools at this point. Now that we have the ETF options, I wouldn't personally use the futures.
Perspective of a sophisticated trader. What I'm saying is most people don't have that knowledge, and so they just don't play in these markets.
But I guess. If I think about it, I feel like if you're not sophisticated enough to reproduce the strategy yourself, you probably shouldn't be buying some kind of black box that seems like it does something, because it probably means you don't really understand it. And then it might start to turn into something that's not actually serving your needs, but people have a kind of buy and hold on instruments where they thought about it a year ago, and then so I don't know. I'm not saying it's a bad idea.
I agree that in the general case, it might be tricky to do a black box, but I think specifically because of Bitcoin if the black box is only one very specific type of black box, which is you are a Bitcoin crazy person convinced hyper-Bitcoinization will occur, this is the black box you want. And I think that can be done.
There's, I mean, if you're not retail, but like there's a whole world of, you know, like higher net worth type of individuals that will buy these exotic products from banks with this kind of stuff. So like they'll give $100, the thing sells, I don't know, S&P puts, and then buys higher upside calls or whatever. You could do these structured products for high net worth people. And I'm sure now that the ETFs are live, that these things
aren't doing this black box, right? They do other they have their finance theory. What I'm saying is there needs to be a business that is the business needs to tell you this is the black box you probably want and you didn't know you needed.
No, I mean, this is the world of structured product. Like this is like a huge business across every bank in the world. Like,
but what I'm saying is
we had one in my bank.
I doubt there's a structured product that starts with the premise of hyper-Bitcoinization is going to occur. There are customers who know this. What structured product do those people need?
I would think they're starting to think and market that. I mean, I don't think they're saying, you know, Bitcoin's going to 100x next year, but they're probably have research pieces that are, you know, hinting at theories like that and saying, you know, this is the hot new asset. Who's bearish?
I bet all these structured products are bearish, and they take, you know, it's like.
Oh no, they can be directionally long for sure.
No, I mean. When I say bearish, I don't mean that they're not bullish. I mean bearish from the Bitcoiners there. So they can say, 400K price target, but they'll still have diversification in other assets.
No, not necessarily. You can have a structured product that's like Bitcoin only and says you're feeling bullish on Bitcoin. Here's like 3x upside with like, you know, and then you're knocked out 33%, stuff like that, like for sure. Like the way these things structure is like, I mean, there's regular issuance where they're like, they have standard kind of payoffs. But then if a client comes to them, they're like, can we do this? Like, you know, you'll price it up and you'll package it for them. Like it's like the exotics is
then my premise is twofold. That these structured products should be available as easily as Robinhood, and two, that there should be a business-facing version. Because, you know, large corporations obviously have whatever trading desks they have. I think that, you know, a startup that just raised their first round of capital should have a nice, slick product that makes it easy to use.
Yeah, I mean, that world is developing. I haven't personally know what's available for. But if you have any kind of money, I mean, if you want it to be to the Robinhood crowd, it's probably not here yet.
The thing is, all these businesses that are developing are trying to have a lot of different products. You need to have something that says the only structured product is the Bitcoin maximalist product. And there's variants, you can, you know, push different levels on it. But any company that is doing this now is going to be like, oh, we have an S&P 500 automated blah, blah, blah as well.
Sure. Yeah. But like, I don't know how well it's suited to, you know, Bitcoiners like you, because, and I'm not saying I'm very far from you, but like, if your premise is Bitcoin is going to $1 million within 2 years or whatever your bullish premise is, you're just going to buy tail calls. Like, you're not going to bother with some kind of fancy structured product that adds, like, a lot of these things too, they add opacity so they can kind of add some fees on top. You know, it's like the weirder, the more complex, the more it becomes opaque and hard to price.
No, I don't know. I might, because the product could be offered as because you do have to manage stuff, right? And what we saw in the room over the past couple of years is in 2021 we all sort of went in, but we were really irregular about doing it. And if we had stayed consistent, we probably would have hit the calls in 2022, and we all would have been up a lot. So I'm thinking a product which is basically advertised as, it's sort of like the Universa hedge fund premise, which is it loses money consistently, but sometimes it can massively.
Well, what you're talking about is rolling very high up strike calls perpetually on Bitcoin. That's what you're talking about.
So literally,
so
just
you have to finance that somehow. So you're gonna want to be adding some kind of sales to monetize, to finance that in your product, right? Typically, how it works is like you give $100, and then the thing sells stuff to finance buying stuff, so that you, and then at the end you're either principally protected, so you get your $100 back, or you're not, and you can go to zero, or maybe
no principal
lose not all your money.
So it's just an instrument where you can put however much, and the suggestion is whatever your overall basket is,
That's
put
fine.
whatever the equivalent of 1/10% every single
If
month.
you,
Make
if
it
you ask
recurring.
me, you don't need a bank for this, Michael. Just buy the highest tail calls when you're out every year, or now, especially now.
Well,
that
look,
ETFs
yeah,
are
for
live.
myself, that's what
Like,
I'm going to do.
yeah.
I'm going to start doing that
Yeah.
personally.
Sure. Well, that's fine. I mean, the degens now know about listed options. It's like now that the Bitcoin ETFs are live, you're going to have this huge liquid listed market with like 2-3x strikes and 1 to 2 year expiration dates. Like if this is your thesis, you can easily throw 1% of your net worth or 5% into 2 to 3x 1 year calls and just keep rolling those.
Look,
until
I
the event that you're
totally
talking
agree with
about
you. It's
happens.
easy. I agree it's easy. I'm going to do it myself. But I think that what's easy, right? It's like, what else is easy? It's also easy to inject yourself with peptides, right? I didn't inject myself with peptides for 2 or 3 years. Why was I nervous about that?
You want somebody doing it for you just so it's happening?
Exactly. And here's the thing. In terms of if I'm not doing it, or if HODL didn't do it, or if anyone else, we are the sort of people who are going to do things typically earlier. I mean, there's some people who did it, but we're the sort of people who are going to do things earlier. So if we didn't do it, I think there's a lot of people who still won't do it even when it's very easy.
Yeah. Maybe. But I don't know. Listen, but this involves marketing, finding, setting up legal structure. It involves work.
Yeah, and there's whatever regulation in terms of how you're advertising it.
Like actually doing something like this is just either you're part of a big financial structure that supports it, or you have to do, like, if you want to do a startup that did this, like, it would be a fuck ton of work just to, like, set up the legality of it, find customers. All that. I mean, I don't know. It's like
in some ways,
endeavor.
it's not necessarily that hard, depending on maybe some of the regulations. So, are you familiar with Alpaca Markets?
No.
So they have
Sounds like they're Bitcoin related.
They have shitcoins and Bitcoin, but their whole thing is basically an API that lets anyone make their own Robinhood. And they try to do this in a bunch of different countries. So if you want to start a brokerage, it's actually now very easy. So you don't have to go through any of the FINRA regulations. You just pay their API fees, which...
Are there successful, like, brokerage instances on there?
Oh yeah, they're doing quite well.
Really? Interesting.
Yeah. And they have different locations, and especially a lot of what they have is different countries, where it's like you're in whatever country. If you don't have that much income, it might be hard to get exposure to U.S. stocks. They make that far easier.
Right.
So if you had something like that, it actually wouldn't necessarily be that hard to build.
Mm-hmm. Yeah, maybe. Go ahead.
I don't think I'm the person to build.
Sure.
Yeah.
It's like I feel like I might, somebody like me would be the right person. I just don't really want to work right now.
Yeah.
But I hear you.
Yeah, because I have other projects I'm trying to work on now, so I don't really have the bandwidth for it.
Okay. So MSTU calls are 280 calls. Means you have to pay 65% of spot to buy a call.
Can you explain what that means? The vols, is that some unit?
Oh yeah. So volatility.
I know what volatility is in general, but how are you quantifying vols?
A vol is 1% vol. So if you have, so these are annualized. So to get daily vol, you divide by a square root of whatever your the account convention is, so like 252 or whatever. So roughly you divide these by roughly 16, and it tells you for you to break even on these as a buyer, a long, or seller of this option on a delta neutral basis, meaning you're rebalancing every day, it would have to realize more than what is 20, like 15% moves every day is kind of your break even. Sorry, you have 14, whatever 280 divided by 16 is. So, but you know, if you're buying this as a degen, you care less because you're directional. So, or I mean, maybe you're not a degen, maybe you just have a prediction that's going to end up higher or lower. So right now, but if you're a vol trader, all you care about is how quickly it goes there. That's why I was, you know, pointing this out to you. It's like you're making a vol comment based off a kind of a single day event sort of a situation where it, you know, jumps from 500,000 to 1 million or whatever. And by the way, that's just 100% move. That doesn't necessarily kill you as a market maker, because this is the other tricky thing in what you're describing. Your option doesn't have vol exposure if it's far from strike. So like if you buy your call and you pay a lot of vol for it, and then it rallies and now it's away from strike, it doesn't really have vol exposure anymore, because now the model's saying it has a 100% chance of being in the money because it's very high. And so even if you had your 100% move, you wouldn't make any more money than somebody that had, you know, a future or a stock at this point. So you not only have to be right in terms of this event happening, it has to happen when you have volatility exposure. Basically, your call still needs to be out of the money, right? So like if you had bought like a 300% strike call for not too much money, and then it went 5x in a day, or you go from 200K to 1 million because we have a hyper-Bitcoinization amount, then you would crush it. But if we had gone to 500K and then jumped to 1 million, you wouldn't really have made that much more money than somebody who... Yeah.
You would want to be selling at the first sort of initial movement and then buying another call?
What I would say, yeah. So what I would say is if this is your strategy, like as soon as you're getting somewhere close to, like, let's say you're like, the highest I can buy is like 300% strike call. You would buy that 300% strike call for not a lot of money. And then if we double and now it's become like a 150% strike call, you would roll it into the 300% strike call again. Yeah.
So I think that alone proves why this needs to be a product that's automated for 99% of people.
Sure. Yeah.
Because of that thing. And that's the thing people are nervous about. Like, oh, if I'm doing the options and I know that I don't know what I'm doing, am I implementing that sort of thing?
And by the way, this would be the thing to tell the degens that haven't touched their MSTR calls. They should roll them up, you know? It's like, take a lot of money, you keep your exposure, just roll them up.
Oh, yeah, exactly. That's what I was saying. If they want that upside, it's take 80% into Bitcoin and then 20% into very risky, longer dated options. Yeah.
Yeah. Because now actually they're under leveraged in a way because their options are deep in the money. So they could lever up some more. And, you know, they could 5x their exposure, or more sensibly, they could maintain their exposure and monetize 80% of the position. Yeah, no, 100%. That's what I do if I were them. Like, I wouldn't judge them for maintaining the exposure, because I don't judge anybody for riding a winner or whatever, having a deep conviction about something. But I agree that like that's probably the smart play at this point.
David, we're doing driving around Hillsborough County.
Can this be an ETF where I just put money and it does what you said?
like an ETF with an algo baked in.
Yeah, they have those.
Yeah, conceivably. It's just whatever you do. Yeah, no, you could.
I wonder how that would do in terms of, because the thing is, if you have it as an ETF psychologically, I don't know if people want to try it because it looks like a thing that's failing and failing and failing until it doesn't.
Well, it's the Nassim Taleb strategy, actually. Yeah. That's this whole thing. It's like buy till puts. And I don't know that it works very well, actually, because markets don't really crash anymore because money printer. But that was his stick for like 20 years. It's like markets are underpricing wings, which was he's saying markets underpriced downwings. You're actually saying markets are underpricing upwings on Bitcoin, which is probably true, by the way. Like I probably agree with you.
And I think Nassim Taleb would be right, probably, if you actually had a sound measuring stick.
Yes.
Rather than.
However, this is where it's tricky. The puts might be, like he might not be able to run a strategy without a money printer, because markets would be inherently more volatile.
I haven't bought puts before, but I regret that I didn't buy any when I had very high conviction that one of these companies that SPAC'd had really junked technology and wasn't going to do well. So even with the money printer, I feel like I should be buying some puts, just a small position. I just think about it as therapy, right? Because I feel like I should try to be making money off of these scam companies collapsing.
I think if you've done any kind of analysis and you have an actual deep conviction, like I feel like a deep conviction is the hardest thing to get in the markets. Like it's very rare, actually.
That's true. It was one company. I don't usually have it for most guys. It's one kind that I happen to know a lot about in that particular industry.
And I think then you should act. People have activity bias, and so this is a problem for them because they rarely have deep conviction on anything. They just feel compelled to do stuff, and so they start to buy stuff they don't necessarily have an intuition about. But like the second you actually have a bona fide, genuine, deep conviction on something, like you should put a small.
Yeah, I should
probably leverage play on
because I feel like I just need to play a little bit with it so that when I do have conviction, I'm ready to execute. Because that was the thing. I've never traded. The only options I've traded are the Ledger X ones. I don't think I even have my account permissions on Interactive Brokers, so I'm trying to open more accounts. I was thinking about writing, seeing if I could write an op-ed and send it to like Wall Street Journal or something to try to get it published because of how ridiculous the company was. And so, I kept Desktop Metal. And I have lots of tweets throughout all the peaks, and they actually wanted to acquire one of the companies I started at one point, and they collapsed 99% or something. Never were profitable.
Did they have like listed positions though, like listed options?
I'm sure they would have. I mean, at their peak, they were like a $3 billion company.
Oh, okay. Yeah, they would have. Yeah, no. I mean, so do you have like tail calls on Bitcoin right now, like long dated?
I'm opening accounts because I previously just used Ledger X, which is shut down, and so now I'm having to.
Ledger X is at the time was like terrible, but now it's dead.
Yeah, so I'm working on opening a Fidelity, Schwab, Robinhood account, seeing which one will actually open my account first.
Oh, okay.
Because I have Interactive Brokers, but I had some issue there, so I can't even get trading permissions, I think, to get access to options.
Yeah, no, I mean, these ETF options are like about time. It's still depressing because like Deribit is still like 12 L's cheaper than IBIT options, which is absurd.
Oh, here's the point. The IBIT options and the other ones, unlike Deribit, they don't allow you to have a strike price that's more than like 2x the spot price. Do you expect that to change at any point? Will there be 3 or 4x available?
I wouldn't. The only way that happens is if you run. The way listed options typically work is they kind of do this grid where they go like 50% down to 200% up kind of a thing. And then if a market maker wants more strikes, you request the exchange to list more strikes. Typically, it kind of stays within that range. But if Bitcoin were to double, all of a sudden they would list so if you went to 200K, you would list the 400K strikes. And then if you were to have a bear market, you would go back to 100 grand. The strikes would remain. So you'd have this fluke period where you would have more strikes. But yeah, typically you're not going to have extreme strikes.
Okay, but I guess you don't need you don't need to maybe do the extreme strikes if you're doing the strategy that we described of if it starts going up, you roll it into another call.
I guess it's like, what does that singularity look like for you? Is it a 2x in a day? Is it a is it a 4x in it's like,
I don't know. It's like let's say a 10x in a year. I don't think that's like, but that's sort of the thing Hodl's been pushing. It's like, hey, 1 million by end of next year.
There's two ways to gain extreme leverage. You can have a high strike or you can have a short expiration. So if the high strikes are not available to you, you can also just buy like 3 months, 2x options, roll those. Yeah. They're going to be a lot cheaper. That's another way to do it.
Then again, that ties into, I want this to be an automated product, because even doing that, I will do that. But I'm probably not doing exactly what I want to do based on the position or the sentiment I'm trying to express.
Yeah. I hear you. But if at this point, you're going to have to do it manually. So these are your options. It stinks that Deribit's not accessible to American citizens.
Do you think it makes sense to try to get access to Deribit, like through a family member or something?
Yeah, you could try. It's like, what's the risk? I feel like it's more a risk to them than you. If they have you, it's like how Binance got in trouble, or these people get in trouble when U.S. citizens end up cheating. It's like, is there a risk that they go, you were American, you weren't allowed, we're keeping your funds? It doesn't feel like a huge risk. So I'm not recommending anything illegal here, but is it an option to you? If you can do it,
you can fund. It is. Can you fund Deribit with Bitcoin?
The problem is
Okay, so you could actually you could KYC with a relative. You could get a relative to KYC, but you could actually pull up the account and use a VPN.
Yeah. Now, where it gets a little tricky, if you're, I wouldn't say above board, but you're going to have this is going to be somebody else's account. So technically, if you start to pull funds from somebody else's account because it was your trading earnings, okay, well now technically they've earned money in their name. And they have to say, well, no, it was Michael's.
Yeah,
so I didn't earn any money, so no.
Tax liability. So ideally you would have it in a, so I guess specifically Argentina. I wonder what the tax reporting is like there.
Well, it's like, Uncle Sam could go, well, there's a gift tax, and then there's capital gains, blah, 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 blah. It's like when I'm not saying it can't work, but, if you're going to send tax, option one is you don't pay taxes, I don't recommend that. If you do pay your taxes, they're going to be like, where'd you make the money, potentially? You'd be like, oh, well, I had this other person, it's like, I feel like that's more your liabilities are on the tax front, personally. Yeah.
But are you saying I was looking at the options on Deribit, and it seems they're a fair bit cheaper. Is that right?
They are. No, so I was saying they're like 25% cheaper. They're like 60 balls, and iBit's not 20. Yeah, close to 20. iBit is like 72 balls. Pretty flat screens, strike and expirations. So yeah, it's cheaper, higher strikes. It's as liquid as you need it to be. Maybe for huge players, they're gonna.
Yeah, that's what I was thinking.
Should get
even if I put
10K
10K and it does 100x, there's plenty of liquidity for that.
Oh, 100%. Yeah, you're definitely not big enough for Deribit. Ledger X was painful. Like the one time I played there, it was just brutally illiquid. It basically never took off properly. But Deribit,
it's about the sort of the overall counterparty risk that it's like Deribit just sort of disappears and everything's gone.
Yeah, rug pull Deribit. Well, I think first of all, you're not going to be doing this in a material size versus your portfolio, so probably a risk you can bear.
Yeah, that's true.
But they are regulated in Dubai, so it seems to have like regulatory oversight. Or they have an entity that's like Dubai regulated, yeah. But we are plagued with an American passport, I'm afraid, so we have that fucking I don't know, it'd be nice if this administration did something about that, because this whole, like, this is all related to, like, bank secrecy and all this shit, you know? It's like, you know, the American system...
So someone who's not American, shouldn't they be able to arbitrage this huge discrepancy?
No, so, yes, there should be some arbitration going on, which is... I would think this thing shouldn't hold for all that long, but you do have to set up an entity that can trade both, but that shouldn't be too hard, you know? So, I mean, the IBIT option's literally just listed, so it's going to take more than a day for these things to arb out.
Oh, that's
this is not just...
So within a month, this premium might be gone and it might be fine.
However long it takes for savvy players to arb this shit.
Okay.
Like, 13 vols is a massive spread to capture on a 50 vol name, so... Like, somebody should be, like, jumping at this in the same way that, you know, for a time, Bitcoin was trading 10% off between exchanges, and now it's probably a lot tighter.
So we're
this
talking
is not
weeks
that much more complicated.
Months, right?
I hope so. Like, if I don't see that spread collapse in a year, it's going to kind of blow my mind a little bit. Maybe it'll happen, but it'll kind of blow my mind. But it's frustrating because, you know, it's like now you're overpaying for it, basically, because you're an American citizen. It's very frustrating.
Harold, do you know?
Now, if you were selling options, it'd be good, but
yeah. Harold, do you know if Punter Jeff is rolling the call options into more risky ones and putting part of the position into spot?
I know that he's rolling some of them into further.
Yeah, roll calls.
Yeah, further out of the money calls.
That makes sense to me.
That's all I know. That I do know he has.
BC 1 hour point out how if you just have a bunch of in the money calls and that's a very large percentage of your portfolio, doesn't quite make sense.
He is also rolling. He has spot Bitcoin as well.
Yeah,
just said that. Yeah. But yeah, man. By the way, I just got off the phone with Jensen. We were talking about the potential for a gamma squeeze on MSTR and Bitcoin. I think it's going to happen. I'm like becoming convinced of this. I also just learned what a gamma squeeze is, but I'm deeply convinced because the underlying
gamma squeeze. I don't know exactly all these. I forget what the difference.
A gamma squeeze is to make it simple. A gamma squeeze is when a bunch of shorters go short, and then they have to cover the short and take control of the underlying.
Squeeze that people...
No.
Go ahead, BC. You go ahead. Yeah.
Gamma squeeze is when there's a lot of short optionality in the market, so short volatility. So you have, when you trade an option, there's two things that can happen. You're either using the option for directional leverage or you're a volatility trader. If you're a vol trader, you're going to hedge it with some amount of the underlying. And if you're directional, you're not. Now, if you have two vol players that are facing each other, you're not going to have a gamma squeeze because on the way up, let's say somebody sold calls, he bought some underlying, I'll use MSTR in this case, he bought some MSTR, the other guys bought the call and shorted some MSTR. As it goes up, they both need to rebalance in symmetrical positions, in symmetrical directions, so they both cancel each other. But if you have a vol seller, he's now short the optionality. The other guy is pure long, so he just used the call for leverage. As the MSTR in this case rallies, the call seller needs to buy more MSTR. The other guy does not. And so he literally has to go in there and hedge his call by buying more MSTR. If you have optionality in the market that outsizes the liquidity of the stock and the stock starts to run fast, then all these option sellers that are hedging themselves will start to pressure the stock up. That's a gamma squeeze, and it can go in both directions, obviously. Now, for this to happen, one, you need localized, outsized optionality, meaning your options need to be close to the money, and everybody's got to have the same positions. If you have staggered strikes and expirations, then you have less localized optionality, and then basically people are taking turns rebalancing themselves, so it's not as impactful. So the reason it's very hard to make these kinds of analyses is it's hard to know which way the market is set up. It's also, so you have to start analyzing where all the sources of optionalities are, and then making assumptions on whether people are vol players or directional players. Now, there's listed options on MSTR. Those are going to be very hard to decide whether it's vol players or directional players.
Okay, now,
And then,
BC said it the nerd way. Let me say it the cool way. It pumps Bitcoin a hella bunch, bro. Like a fucking shitload, bro.
It goes both ways. So
Whatever about that.
Okay.
BC, what do you think about the premium, the NAV, and MSTR?
So we had a conversation about this the other day, obviously. The NAV, to me, I can't justify, I'm not on Hollow's side on this, like a long-term sustainability of this premium. Like I think, let's say MSTR bought all the Bitcoin in the world and Bitcoin became 100% of monetary premium in the world. There's no reason for the company that holds the Bitcoin to be worth 4x the total amount of wealth in the world. So for me, intuitively, that NAV has to go to zero at some point. So,
yes, and so the question then is sort of, can that premium be sustained long enough for a gamma squeeze, or will the existence of the premium basically drain the energy from the gamma squeeze?
There's no relation between a gamma squeeze event and the premium. A gamma squeeze event is there are people that are forced to buy or sell something because they have option positions on. They don't care about, and a lot of these people, they're going to have risk limits. They literally can't, even if they have a view that the move is not sustainable, they have to hedge themselves.
I know but it's about the willingness of people to sell. Because someone can hold at $100 and think, well, if it hits 120, I'm going to sell a bit. And so during the squeeze, it's when do people start selling? And if you're squeezing at 1.2x, it's a lot easier to keep holding versus saying, hey, it's 6x. If it's 6x, I think a lot of people are going to start rebalancing out during that squeeze.
Point is, the squeeze you want to think about is the market just has to do this, right? So the question that you're posing is, at which point does the market start caring about the NAV or have an opinion that the NAV is just not sustainable, right? And there are people, I think, here that think the NAV could be 10 or 20 times fair, which fine, maybe. I have no idea. Because it's a degen play, right? Like for you to justify this NAV, MicroStrategy has to accumulate 4 times what they have right now, or 3 times wherever the premium is right now, with non-dilutive issuance. Now, the dilutive issuance they're doing is happening at the inflated NAV, so it's not as bad as full dilution. But ideally, they would borrow $80 billion or $100 billion of vanilla bonds, and then just buy Bitcoin with that, and then it would be back to. And by the way, you could do this without being worth 4x. We're just talking about leverage. So I don't know what world people think that borrowing or issuing stock, unless you're at an inflated premium to acquire more of something, should make your stock go up. But the market, I was hearing this podcast today or yesterday. Somebody was like, well, MicroStrategy are able to borrow money to buy more Bitcoin, so that alone justifies a premium. And I fundamentally disagree with that, because you could buy MSTU and get 2x the exposure. And fundamentally, you've basically borrowed money to buy more Bitcoin, but you're not traded an inflated NAV. You have to understand, if you buy $100 of MSTR today, you're getting $25 of Bitcoin exposure functionally.
Hey,
now
BC1, are you suggesting that
yeah.
MSTR should buy MSTU and put it on their treasury?
Yeah, 100%. And then we should buy calls on that.
Fuck yeah, I'm bullish.
So Michael, I personally can't justify trading this NAV. For me, it's like a degen play, and it's fine. You can play. I've never played degen plays. I've never bought, whatever. This is like memenomics. To
Yeah,
me.
that's
And
how I felt as well. So I had MSTR from 2022 just because I needed basically to prove that I'm not fully broke. And so ETFs weren't available. And then like a month ago, I just saw the premium and it was like 2.5. And yeah, it would have been higher if I held the past month. But I just felt, I don't want to take that risk because I don't understand.
Well, that's fine.
So
And the market is made up of people like you that, think it's too expensive. And eventually the market will, this will resolve through market forces. Right now the market forces.
So that's my suspicion. I think like HODL today was saying he has 20% overall exposure to MSTR, MSTU, and some options. And so if you get to a 10x premium, if HODL suddenly has 70% of his net worth in MSTR, I think he's even before that is, and maybe I'm wrong, but I think he's going to.
Well, I don't know. HODL, that's a good question for HODL. HODL, is there a moment where you sell the NAV premium? Like, is there a number in your head? Is HODL still here? No. I think I annoyed him with my nerd talk.
He's here. He's just busy winning.
Oh, that's fine. Okay, HODL, when you're done winning, if you could grace us with your thoughts, that'd be nice.
Yeah, so basically, I think there are going to be a number of people who are still Bitcoiners, and when you get to a certain thing, regardless of the memes, they're going to start selling, and that will take out the energy from the gamma squeeze.
Well, yeah, and by the way, like, the gamma squeeze doesn't have to happen. The NAV doesn't even have to expand. If Bitcoin goes up enough, and all these options are now deep in the money, like, there's no gamma squeeze. So it's like the direction matters, which is why whenever people say I'm convinced a gamma squeeze is going to happen, like, these are really people that have identified the whole landscape of where the optionality is.
So basically what it sounds like what we need is the retail product that rolls your calls forward, that always keeps you far out of the money to trigger a gamma squeeze.
Well, but I don't think your product is going to start dwarfing the optionality market. Maybe. You'd have to be very successful. And a lot of the optionality right now is on the converts, but those don't have like a ton of gamma because they're very long dated. So I don't know. Like, until I see a gamma chart, which I don't care to bother with. I could actually. But it's not just that.
I think the other thing is, anytime someone's holding something that loses money, it's psychologically not great. So if you have a product where it's like, you're paying into something, and it's like you're buying the thing that might pay out, I think that could work better psychologically for people.
Like, maybe, but I'm not sure it's for this market. People like things that go up. They don't like to spend a little bit every month, Like, I'm not saying it doesn't work and it doesn't appeal to a crowd, but I feel like the kinds of products that sells are the one that grow up a little bit all the time, or I don't know. Maybe. Anyway, I don't know about the gamma squeeze. The NAV premium, I'm just going to watch and grab my popcorn.
Hey, BC1, how would you feel if in like 6 months from now, the total Bitcoin per share has doubled and the premium to NAV is still before?
Well, if it's